Morning, guys. This one's going to be another quick update in terms of Bitcoin. If I'm honest, there's not really that much that's changed in the last week or since I've done my last stream publicly. I've just recorded a subscribers only stream, which is a little bit more in depth in terms of some kind of key levels, why, where, what next. Um, but in essence, I'll just cover what I'm seeing and what I'm kind of still seeing in terms of a couple of interesting kind of factors. So, one of the things I did mention in the subscribers stream was the pairing of the two volume profiles sitting here, right? So that's quite an interesting thing to keep an eye on. This is a little bit more to do with the COT data, but very, very interesting in terms of the matchup and the pair up. So what I'll do first of all is I'll just go in and cover what I've said about in the last, I suppose the last year, kind of 15 months, 18 months now or more. So to do that, right, go back to some of these. This was back in December last year. I actually covered in this post from the previous year, right? The first post, you click on each of these individual posts. This goes back December 2020, okay? And talking about why this would start to couple in terms of DXY, why the move would become interesting in the grand scale, okay? I then covered from there the value areas and why we were doing the reaccumulation, where the value areas were sat, and ultimately where we were likely to go. Why this orange line would actually be useful kind of in the future, right? So this, like I said, back February 2021 now. So this key level, if you play this out, you'll see why this orange level become very interesting for the future, right? Now, play this again, you'll see how relevant these key levels are. We go back up to a new all-time high and then ultimately back on down, and you'll see these key levels playing themselves out, right? This for me was just justifying that we've become now institutionalized, right? You see the key levels, you see these key moves, and then again, understanding why these moves will be doing what they'll be doing, right? The Rocket Call post, this was the 18th of March. Play that one out. You can see the kind of key levels, right? So for me, this is just more and more evidence that we've become institutionalized and it's becoming more institutionalized with every single move. Okay. So I've covered that in this particular post. Definitely worth a read if you haven't seen that one. I've then done the roadmap, which starts all the way back. This was March 2021 again. Covered some of the same information in there, but with a little bit more info in terms of the key levels into uncharted territory, why we were likely to do what we were doing all of last year, the COT and the money flow situation, why we were likely to have the Wyckoff distribution pattern again at that new all-time high being the uncharted territory high, why we were likely to do what we were doing. And, this was covered even in August, back in August, I'll zoom in on this one, why we were likely to move up just above that 65K and then back down to the value areas kind of all over again. Okay. So we've covered that and covered it, countless times. And I think I suppose the regurgitating of the information is kind of key to understand why and how and the exact formula that this is actually taking to become institutionalized, right? And if you don't understand, that, you have to look into the COT data. You have to understand what Composite Man is doing and what retail is kind of wanting. Okay, so this is one of the newer posts, March this year, talking about where the money sits right now, why we likely to go up, grab liquidity, and come back down. You'll see these value areas just being used kind of time and time and time again. Come into the money, this is where a lot of retail will be buying. We've come straight back down into the value area low, and we're now in that kind of phase again, doing ready for its next move. Okay, so just understanding where the money is sitting, why the money is sitting there, will do you a lot of favors, even in the shorter term time frame type trading that you're looking to do. But having your bias, using that bias to your advantage, is a massive, massive, credit in terms of you are trading and treating trading a little bit more professionally. And I think overall, whether it's a 1 minute time frame or a monthly time frame, you still need to have that overall bias, know where you are on the roadmap, and understand why money sits where money sits. And that'll help you at no end in terms of making profits and money from the market. Okay, so I'm going to come back into the chart. So, you know, just updating kind of where we are. As I've said for the last 18 months, we're currently on the roadmap, right? The roadmap is taking us where it should take us. Now, as I've just explained in the 2 or 3 posts that I've just shown you, we've done nothing really unexpectedly, right? We've had a massive buy move here and we've rallied on up. Post the value areas, we've actually had retail buying at the premium, right? We had the rocket call for a move back down to the E level, right? The orange box that I drew in that rocket call post. And we've moved up for what I saw as the weekly 5, right? So I've covered all of this over the last 18 months, prior to these moves happening, why we were likely to do what we were doing. If you look back at what I was showing in August, this move to this move, up past new all-time high, and then drop sub 40 again, it was already written out and mapped out in terms of why we were doing what we were likely to do. A lot of this falls back down to the COT data and understanding where we are from composite man's perspective will give you, like I said, a little bit of an edge in terms of big picture. Okay, so where we are at the moment and where I feel we are in terms of the current move is I'm sticking to my guns, right? I still think that A has only just come in, right? I do think this is the end of, and I think this is A. So I do feel that the A move is now done and complete, right? And this is, like I said, a much, much bigger time frame. This is the A. We then expect the B down for the C. And as I've said, for months and months and months, I don't think the A needs to be deep. I think we're likely to get a larger scale accumulation pattern. Bear in mind this is a weekly time frame, and therefore I think we got justification for a move up, a blue move in terms of the Weiss, that coming up for a B, and then I think we come back down for the C, giving us the spring and obviously the move then for the rally later on, right? But that isn't going to be quick, right? So if I'm not giving updates or not doing updates at the moment, I'm still renovating a property. I got a little bit more time that I'm doing that. I'm kind of enjoying some kind of hands-on work for a change, and I think overall it's kind of been a good time in terms of the market. It's kind of relatively slow. There's not really that much going on, nothing really exciting. And with the kind of time frames that I'm looking at, I'm not going to miss anything anytime soon. So I think overall for me, I do feel this is accumulation. I do feel that smaller time frames, there'll be a lot to look out for. Obviously, you guys that are subscribers, we'll keep you updated in terms of what to look for, why to look for, what you should be looking for in terms of these moves. But in terms of regular, YouTube updates, there's really not that much else to say that hasn't already been said. Okay. Let's cover off the last one. So this was the last post I covered. When was this? May 15th, so 2 weeks ago. I've just talked about all of the things I've just said again, a year's worth of Bitcoin, what I was talking about in August. This is almost a summary of this particular stream. Talked about the value areas and why they'll be key. Where we were talking about October last year for the move up to that particular high, what we actually got from those highs and those levels, back down with the distribution schematic, what we were likely to do in terms of key levels and why they would be utilized as key levels. This was the fall through in terms of the Wyckoff distribution schematic. So many people were saying to me, "No, this is accumulation. This is accumulation." I told you where we were. All the way back then. Um, what we were looking at, why we were looking at, even down to the target kind of ranges, why we were likely to move down. There's loads of things in this one, guys. If you want to read through this one, this is definitely worth a read. This particular post. Um, yeah. So in essence, like I said, nothing really interesting, nothing new, nothing that hasn't already been said. I'm sticking by my guns. We have done for the last 18 months or so now, and yeah, I think this is doing what I should be doing. So we keep you posted with something else when there's something else to update you with. So enjoy the rest of your weekend, and yeah, sorry there isn't much more news than that at the moment.